Hi everyone, welcome to the market talk. So two weeks have passed. Today it's two of us, Raphael and I. A lot to talk about, a lot of events both in the markets and in the world. Today and a couple of days before, we saw some correction in equities. So we will talk about our expectations for the future and what do we think and how we are positioned in this sell-off. Gold is holding, bonds are rallying. Before we start, I want to remind everyone that myfractalrange.com is a risk management platform, both for retail and institutional clients, which is made to help you risk manage your positions and portfolios. And if you have not tried our services, we have a free trial where you can test our offerings risk-free. Okay, so a lot to talk about. Raphael, markets finally have some volatility. What you think about the markets and what are your positions?
Hey, Vi. Yeah, it looks like I was right 2 weeks ago to be conservative. I'm being very soft in terms of swing trading, and looks like it was a good strategy. So I'm still only yes from the position I took some while back. I tried to add yesterday and got stopped out today. So I'm not adding. I didn't add today. But I have a new position. I'm long gold. So better late than never, I guess. So let's get into the charts. Up. Okay. Let me get my screen set up. Okay, should be good. Okay, so basically, all I did was take some profit off as the rip was happening. You had the levels from last month, and we reached the we reached the monthly target, which was a good place to take some off. I actually got some sell signals as we were touching it. I have another script here as well on the daily triggered sell. So you have access to this one. So if you saw that in conjunction with the monthly target, you knew it was the time to unload. I know, for instance, that Ragav, one of our power user, closed his calls on SPY at the time. It was the right move. Now I try to add at 6750 for a simple reason. We have equidistant swing low. It was supposed to hold, broke today, and yeah, I'm seeing some stuff that just confirm that it's the right play to be conservative. I want to see what happens tomorrow. I want to see if the pivot will hold or not. But yeah, I'm gonna go through some signals I'm seeing that makes me think that this sell-off might not be over, and calling for 6,750 as the bottom. Yesterday was not the right call. So let's go to the DAX after ES. So if you're monitoring my volatility signal, you notice that the volatility of DAX has been climbing now for 3 weeks non-stop, and it has now impacted this index. So the break of trend has happened, and this is one of the few indexes I like to trade, and for now it's just giving me some signals saying that this thing wants lower. So if you are trading the DAX, you should have watched the volatility. It's not looking bullish. It's looking actually, it's not looking bullish for the DAX. Its volatility is bullish. It's not looking good. Something else that cracked also was the CAC. So another one that I'm watching. This one happened at the end of the month, beginning of this month. The volatility is starting to rise. I would expect MFR trend to break. So currently we are testing the bottom of the range. Sure, usually when this happens, you get some kind of pop, but looking at the volatility of it, my expectation would be that this sell-off is just getting started. So these are all the clues that I'm looking at, making me think that, yeah, being conservative right now is maybe the right play. Something that worked, that was a good call that we did a few months back, was the switch of the dollar to bullish trend. All it's been doing now is rising. Although something that also you should have noticed is the fact that DXY reached its yearly target. So that's MFR target provided to all elite subscribers. And lo and behold, what you get is a sell-off. So if you are bullish the dollar using UUP, or if you are trading it using maybe a short your USD position, taking some profit as we are reaching the DXY yearly target, I think was the right play. Something that is surprising me though is the fact that if you look at the correlation between dollar and equities, so in that case IWM, QQQ, SPY, the correlation is actually deeply negative. It's been negative for some time now, and I'm quite surprised to see that with dollar down today, the market is actually red. So the strengths that we saw before, so I have mentioned that a month ago and 2 weeks ago, especially a month ago, the strength was there. 2 weeks ago, I was less bullish, but still thought, okay, the last attempt to get a deep sell-off was unsuccessful. But this time, I'm starting to see clues that makes me maybe not bearish, but at least a little bit worrisome. So the expectation would be if you see this kind of correlation between dollar and stocks, and you see a red day on the dollar, that would you would expect naturally to see a green day on indexes. And look at what happened today. So I mean, I'm seeing that and I'm thinking, okay, maybe some things are going on. So just confirming the fact that being conservative is the right idea. Now let's go to the VIX. So the VIX, I laid out two different scenarios. The last time we talked, scenario one was we are back to normal. So basically the VIX will get back down in a straight line, bears will be dead, and we are back in bullish. Scenario two was VIX will just over this level for some time and then start to climb back up. Seems that scenario two is playing out. So again, I'm not calling for being bearish. I'm still going for being conservative. This was, let's call it the worst scenario to see in the VIX. And it's starting to materialize. You have a cap on the downside. The short-term range, top of the range is going down, but the long-term range is going up. So this is another clue that makes me not less bullish, at least that I was, even though I was already less bullish 2 weeks ago. So something that I'm gonna monitor, and I will encourage you to do the same thing if you are using my volatility script. So here, blue is volatility, black is trade of volatility. If this blue line gets below the black line, this would be very bad. Basically, what we would get is the same kind of volatility pop that we saw last month. So watch this. if volatility start to go back down and use trade of volatility as resistance, be mindful. I would expect a deeper sell-off to happen. Now CL, let's go to oil. So 2 weeks ago, I took the trade here long. I exited at the retest of trend. My expectation would be that CL is definitely bearish, and I would expect MFR trend to be rejected. So far, it's what's happening. Volatility of CL cannot stay at the floor, something you want to see when you are long an asset. And you can see it's doing higher lows, higher highs. So again, if you are looking to buy CL, just do it tactically. Just take it for a few days at a particular level when you get some kind of triggers and exit at the retest of trend. So again, not being bullish on the oil, unfortunately. Something that I want to be at some point, maybe next year. But so far, it's not performing well. Now let's go to gold. So gold finally giving a good dip to buy. So I drew this area to give you an idea of the place where, in my opinion, you could accumulate. There are several reasons why I'm actually interested to buy there. First of all, we have a cap on the downside. So you can see here a cap on the downside being that the long-term bottom of the range and bottom of the normal range match. Second, so I think Vi will talk about that, but you have two expiration prices for prior contracts in this area. So Vi will talk about that, I guess. And one last thing is the fact that if you monitor volatility and the previous highs where this volatility has been have marked the bottom, sorry, in gold 95% of the time. So my expectation would be that this dip that we are getting is a good place to accumulate for another rip that will play out in the next coming month. The 5% of cases when volatility got there, when it didn't mark the bottom, was before we get actually some nasty lasting bearish trend setup on gold. So the way I'm going to play it is I'm going to keep accumulating anytime gold gets into this area. And if we break it, I'm going to get out. Because in my opinion, that would signal that for the next several months, gold will enter a bear market. So for now, I'm bullish. I'm buying. My expectation would be that this thing is gonna keep climbing for some time. And yeah, so that's a new position I opened. Now let's go to this wonderful asset that is Bitcoin. So this one was an easy one to spot. So first of all, volatility was out of the box, so it's not drawn, sorry, here, but you know it's around 4 point something. So volatility is clearly above. So number one, you should not be long it. Number two, volatility is rising. This is a kind of setup I have shown you on DAX, for instance, or on CL in several shows ago. Volatility is rising. This is not good. When volatility is rising, the asset is either in chop or bearish. Clearly, this one is not looking good. Second, you had a retest of MFR trend, which was a failure. It used it as a rejection, and now it's just doing lower lows. You could have seen the same kind of pattern on Ethereum. see volatility rising, retest of trend, and boom, sell off. Something else that actually happened if you are using the MFR targets levels, and it was a question actually from Ragav, but the fact that Bitcoin tried to climb and hold the pivot, the monthly pivot, and couldn't hold it. Ethereum did the same, couldn't hold it, and all you got was a smackdown. So I'm not very bullish on those two. They don't look good. And for sure, I'm going to be looking for a change in volatility, change in trend, but that's not what's happening now. Trade of volatility is going higher. Trend of volatility is going higher, which is really not good because my trend of volatility is a very long term. The how do you call this? The time frame I'm using is quite long, so definitely this one not good. So I would really not encourage you to be in those. Now let's go to yields. So, and this is the point where I would guess Vi and I will disagree. So what you should have seen materializing at the end of the month and at the beginning of this month was the fact that volatility broke its volatility trade and volatility trend. And now it's actually at the floor. This is usually what you see when an asset is transitioning from bullish volatility to bearish volatility. So basically, a bearish behavior on the asset itself to bullish behavior on the asset itself. And you can see the same kind of pattern materializing on the 2 years, the 10 years, the 30 year. So MFR is still bearish yields, so bullish bonds. You can see it's below. So until proven otherwise, yields are still bearish, but my volatility signal is telling me maybe there is a regime shift happening on those three. And something else that you could have seen on, yeah, okay, let's use, we are going to use EDV, TLT as examples. What I usually do to get an idea of where an asset could have topped, I look into the past and I mark the mean of trade of volatility. And as explained several times, when trade of volatility reaches its minimum target that it has reached in the past, volatility will have no more place to go down, and it will have to go back up. If volatility is going up, the asset is going down. And both EDV and TLT have reached their mean daily target. So meaning that there is a good chance that for both TLT and EDV, we may have had at least for the time being a top. So my expectation would be that the volatility will keep climbing and that the bullishness that we've had for a few months now in bonds is over. And yeah, something else. If you monitor the correlation between for TLT, for instance, and the dollar, you can see that the current return correlation is actually positive. And as I've said before, I'm expecting the dollar to maybe take a pause because it has reached a critical level. Maybe we get some kind of sell-off for some time for the move we've had in terms of the bullishness of the dollar to be digested. So considering the time, I think the dollar reached a good level before, of course, continuing his move higher. But for now, we'll experience a pause. Seeing the positive correlation between TLT and the dollar only confirms my bias that maybe bonds have reached the intermediary top. Yeah, regarding, let's move to some stonks and then I will pass over to the mic to Vi. So if you are looking at some darlings that people like to buy, it's not looking great actually. What you want to see in a real good bull run is this kind of behavior. So trade of volatility going down, volatility at the floor, and this is when you are basically buying with two hands. And for some time now, volatility is looking quite choppy. And this is not only NVIDIA, Tesla is experiencing this kind of behavior as well. Some of them have actually started to break down. So PLTR is still a bullish trend, but you can see also this kind of spike in volatility. Microsoft too. Some of them are still holding, especially because they had good earnings. But for example, Amazon, I have it as overbought. Look at the volatility. It's definitely not the kind of thing you want to see to be peacefully long this kind of stocks. Netflix is looking like crap. Meta, look at the volatility, not good. Apple is actually quite nice for it's maybe the one-off, but same, it's overbought and Matrix is starting to roll over. But I mean, all of this is just giving me some more data that it's really a time to be conservative. I would need to see consistency in terms of signal from ES, NQ, all the stocks darling, the VIX, etc., to be back on the bullish side. For now, and Bitcoin. For now, my expectation is still we should experience more volatility. I would remain quite cautious. Monitor VIX volatility here. Monitor the correlation between the dollar and indexes, the dollar and yields, and monitor what the volatility of yields, the volatility of bonds are doing. And so yeah, that's my take. I mean, I'm sorry, I would like to say I am very bullish or I'm very bearish, but yeah, I mean that's the way I'm gonna play it. I'm gonna stay conservative. I'm gonna keep buying gold on ADD by get until it breaks the levels I have put on. I'm not adding to the yes long. And I'm gonna keep unloading on the position until I see some change. Okay, that's my take.
Thanks, Raphael. Yeah, I think Bitcoin has more downside in it. It needs to go to previous levels because it looks like it has no intentions to hold the current monthly pivot. So we need to increase our time frame to know where we would want to execute it. Okay, I'll share my screen. First, today I wanted to spend more time talking about dispersion, breadth, and overall correlations. But because of what you said, Rafael, I want to start with dollar and with dollar correlations because actually, if you monitor correlations real time on TradingView, or using the script that we provide for free, or any other ways, you will see that now it's not a dollar trade at all, not anymore. For multiple previous market talk sessions, I was saying, oh, that basically now we are trading the dollar, basically now we are trading the dollar, and not anymore. I want to start with a correlation matrix, and then we will go to sector stocks and all the signals. But if we take a look at the UUP, and currently we have 10-day correlations, there are almost no stock dollar correlations at all. And later we will take a look at the historical chart. But now let's address the current situation. And DIA, no correlation because 0.04 is no correlation. IWM, exactly zero. QQQ, no correlation. SPY, negative 0.1, which is also no correlation. Now, if we look at dollar correlations, the only significant correlations are negative correlation to TLT, and maybe XLB is worth talking about, but not that much. So basically now we have dollar bonds fight, but when it comes to equities, dollar is not in play at all, at least in the shorter term. Now let's take a look at the dollar correlation for 21 days. Before we go to the historical chart. But for 21 days, of course, it is still green, but way lower. If you remember 2 weeks ago and earlier, we saw numbers of 0.5, 0.6, and more. So if we go to UUP and then simply measure the correlation to SPY, so let's take a 10 period for us to start, you will see exactly what I was talking while we were addressing the current situation, that correlation was very high, but for the last week it was dropping like a brick, and because basically it was strongly positive. Now it's not anymore, and it went way more negative. Now it's bouncing, but from the current perspective, dollar correlations are very weak or non-existent. And now, just for the perspective, because these things are very important, at least in my process and how I read the market. These things are very important, and we had a negative correlation regime, quite a strong negative correlation regime in stock and dollar in the longer term, and again, now we flipped to positive territory and trying to go up, but still nothing too significant. I'm not buying this move. I'm not buying it, so I'm not shorting the euro currently, and also I'm not buying the euro because we saw this positive move in the last coming days when DXY reached its target, but I still think that currently it's not a good idea to jump onto the train, and I need more information to get a view on a dollar itself. Now I'm basically neutral on the dollar, and the picture will get clearer when we will get to tickers and sectors and equities. But yeah, if we look into correlations, it's a bonds trade. It's not a dollar trade anymore. So this is the most significant change that we saw since our previous market talk. Now let's go to average sector correlations, and actually they are falling, and explanation for that and situation is that it's still tech. The only difference is that before tech was moving equities higher, now it's dragging them lower. That's all it is, because we saw these corrections in Max 7 stocks and in our, let's call them AI related stocks. But yeah, Meta is looking really, really terrible. Basically, Google looks best, but Nvidia had this significant dip. For Meta, I will not call it a dip, because Meta and Oracle, they have a very huge capex problem, and they are very exposed to capex. And honestly, Zuckerberg doesn't have a very good track record when it comes to capex. Metaverse, all this metaverse thing was a great proof of that he's very good at burning money. Well, at least they have money, but investors don't like it. And when I saw the numbers and plans, I'm not surprised that Meta is doing what it's doing. But anyway, all these sectors are currently dragging equities down. I'm not bearish equities. Of course, I'm not adding. We had no reasons to add, because from the first trading day of the month, which was November 3rd, we are always below the monthly pivot. So I have no plans to add that. I'm still holding some. You all know the levels, 66.58 and 24 600s in NQ. We are still above that, so I'm not calling any regime change or bias change, but definitely now it's not the time to buy more. If you are flat, it's okay. If you have some, you have some, but for me, it's not the time to buy more. But why this correlation, average sector correlation to SPY is quite low? Because now the topic for the last couple of weeks, both on X and institutional research and our process is, of course, breadth and dispersion. So I prepared a couple of charts. One is on TradingView, and then we will move to other, but it's just a sector performance starting from the beginning of the year. And basically what is happening is that S&P itself is up 14% when it comes to SPY, but of course we have 23% in XLK. XLC is doing well, strangely, or not that strangely, but XLU is doing well. Why I mentioned that it's quite strange, because XLP is actually negative, so it's not a defensive play, it's a different play. Of course, the yield story has a very big impact on that. But if we look at the sectors, basically half of the sectors can't provide us any nice returns, especially compared to the benchmark itself. Basically, of course, it's still a tech story even after this dip, and XLC, XLU, and XLI have nice returns. But this difference is very important, and of course, we can check what's happening for the last 6 months, and not actually not 6 months, even less, but nothing changed in the overall story. Basically, look at XLK and you will see exactly what I mean. That now we are not counting the April dip. Before that, we were counting that, and of course, still the leader is very clear. XLC is doing well also. So, what I actually wanted to spend some time talking about is, of course, breadth, and why average sector correlations are weak, and what is actually happening in the market. So first chart is just a very simple representation of S&P 500 constituents that are above its 10-day moving average and then above its 50-day moving average. Just to understand that out of 503 stocks that are in the S&P 500 index, Above its 10-day moving average, we have less than 200 stocks, and only slightly above 200 stocks are above its 50-day moving average. So it's not the stock market story, it's not the overall bullishness and positive expectations from the economy. And so it's the story is really individual names and individual sectors. And what's even more interesting and maybe scarier, not necessarily, but if we increase the time horizon, the number above 200-day moving average, which is of course significant, is also, you can say that, slightly above 200 stocks only. And even less stocks are above its 100-day moving average. So majority of stocks are either consolidating or trending lower. It's not, all this rally, of course, is not driven by the entire strength in the overall economy. And the last thing, so this dashboard, I prepared some numbers. So here in the third section, we see the same thing that I just showed to you, that basically only 60% or less, currently 40 and let's say 50% of stocks are above their corresponding 50 and 200-day moving averages. But what is even more important for me is net equities that are making 52-week highs versus net equities that are making 52-week lows. So I just ran the script very quickly before this show to have as close to real-time data as possible. But basically these small bars, greens and ones, are new highs minus new lows. So if a bar is green, it means more stocks are making new highs, and if a bar is red, it means more stocks are making new lows. And currently, basically, we're at the lows, and soon we can expect again to have more stocks actually making new 52 weeks lows compared to the stocks that are making 52-week highs. So now it's absolutely neutral. There is no momentum apart from individual names that people are, of course, talking about in the stock market. And cumulative breadth, which is just a cumulative number of stocks making highs and lows, it stopped rising. So if the overall breadth of the market will start decreasing, it can again play a major role in dragging this stock market down. And of course, oscillator, it's just a smoothed out version, 10-day average of the breadth oscillator, which is approaching zero, which is also means neutral. So definitely breadth is going into a negative territory. More stocks will start making 52-week lows, at least that's how I read this market. And there is a very, very strong correlation between this breadth oscillator and overall performance in the S&P 500. So just keep that in mind. But now negative things out of the way, we can talk about my view about what's happening in the markets and what can I expect. So if we go to yes, the usual suspect, basically what is going on now from my perspective is a very needed correction. So markets really needed that. My overall view had not changed. If you watched the trading plan video that was released on Monday, you know that I expect a Santa Claus rally into the year end and maybe a bigger correction, or let's say a significant down move next year. I still believe that after this down move, no matter how long it will take, we will get another push up. Just another very interesting stat for you, that usually the themes in the stock market that start in the first part of the year, usually they don't end in Q4. At least it almost never happens, and it's a very rare occasion. So what do I mean? If we have a very strong Q2, Q3 performance, usually it continues into Q4. But of course, that's not the reason why I'm still not bearish, and it's not the reason why I expect the crash next year, but it's because of levels. The most important price is 66.58. Now, these charts are not updating in real time because I don't need them to. The most important is, of course, this table. So 66.58 is still the price that I'm looking at. And if that holds, we will still, I believe we will still make new highs, and we will trade at least 69.83. So if 66.58 is the most important price, and currently we are trading at 67.65, it still has more than 100 points to go for me to start rethinking the scenarios. But actually, it will be very easy. We will not be long below 66.58. And if you execute it at pivots or targets, you have nothing to worry about. And NQ is currently trading at 25,300. And again, same situation. I see no problem all the way to 24,600, 24,570 to be precise. But NQ is very volatile and thin market, so we can just round it up to the higher price, 24,600. We are still 700 points away. So we have plenty of room. But why I'm not buying and adding, sorry, why I'm not adding is quite clear, because if we take a look at the targets, we had the previous month target, market tried to break. As I said, I still expect quarterly numbers to be reached, but this month, from the beginning of the month, basically, market is telling us that it wants to go lower, at least for now. We have a very important level at 67.25, if my memory is correct. Yes, 67.25, which is a quarterly pivot, and then, of course, 66.58, which is the most important matrix pivot. So expiration price, and market is always paying attention to these prices. And one thing I know, that two closes below 66.58, and I will definitely not touch equities on the long from the long side at all until the situation changes. And also we have this strong matchup because our price at basically at annual levels, and ours is matching with current month's first downside target. So I will be really watching this level. And NQ is the same. And NQ is actually, NQ was stronger, relatively stronger. It reached its quarterly target, and then of course we see this strong sell-off, and now for the last couple of days NQ is outperforming ES on the downside, or outperforming ES in general. It depends how you want to look at it, but the one issue that I want to touch on is that strongest moves are when NQ is outperforming. So hopefully it will not turn into a stronger move down, because now NQ is outperforming to the downside. But like I said, we still have plenty of room. This market is definitely quite extended, so we still have a couple of percent on both indices until they will reach our downside levels that I will pay attention. So now I'm still bullish, but I'm definitely not buying any additional equities, because First of all, I don't buy on the down move, I buy on a breakout, but second of all, there is still a very big chance that we will retest 66.58 in the years again, and as you can see there, it would not be a first time for sure. So gold, now gold. On trading plan video, and on X, I tweeted that we have a new level for gold, and Raphael is correct that we have one expirational pivot and one matrix level. Not two expiration prices, but two very important prices close one to another, which is 39.83 and 39.60. For now, front month in gold, which is still December, is above these levels. We tried to close below, but then market try to rally. At least for now, rally is not happening. But I'm really bullish gold on gold. I own gold. The situation with gold is that if we get two closes below 39.80, 39.60 area, then I'm almost sure that we can see 37.75 level. But at least for now, and because we started buying trading plan process started buying gold at 3,300 and even slightly lower, so we are definitely fine. I'm just saying that if you see closes below 39.60, there's no need to be a hero, and if you want to initiate new positions, you better wait for 37.75, which would be another major level to the downside. But if I had to talk about expectations, I don't think that we will get it. I think that gold will either consolidate or we will get another move higher, but from here. But based on everything that I see, we still need to see, of course, a break at least back to the 4 handle. And if we make a new all-time high, so if gold closes above 4,400, no matter how long it will take, we will have another 1,000 points. I still believe that gold will trade way above 5,000, but of course these levels are not time frame specific. It can happen. Well, we all know how gold moves. It can happen this year or it can happen 2 years from now, but that would be the plan. But of course, for that plan to be in play, first we need to close above previous all-time high. But to the upside, we have levels at 4,080, then 4,090, and then after 4,090, we can really target previous highs. So nothing changed. We are still above levels. Now, one thing that now I'm even more confident, and what is even more significant for me is this thing that I talked a couple of weeks ago, if not earlier, that the real hidden bull market is most probably now in bonds. And I still believe that ZBZN has plenty of upside. And if we take a look at the levels, my platform now uses decimals, but I know exactly that it's 116 and 25/30 seconds, which is the most important pivot for ZB. For now, it's working like a charm, and if we get another opportunity to buy it lower, I will definitely be buying it at that level. But actually, we had it this week, so I'm quite fine with that. But my view is that bonds will go higher, especially mid curve, but all of the bonds will go higher. It's just the question of how much volatility, how much of a chop we will get. So and of course what the events will happen. But even if something will happen that will cause some sell-off in bonds in this regime, I will definitely be buying bonds. So yeah, this is my perspective, and 116 and 25 30 seconds is a very important level for us. And again, we are above quarterly pivot, and last month we had this sell-off exactly from the monthly target. So we will see what this month will deliver. But I see no reason to be short bonds now. Actually, I would think that it's a terrible idea to be short bonds, but hey, you do you. I just think that this thing is definitely in the bull market now. And Bitcoin, yeah. So I mentioned that Bitcoin has plenty of downside, at least how I view it. And of course, we have broken quite a few important levels, both monthlies and quarterlies and pivots. So first of all, Bitcoin is below its quarterly pivot, it's below its monthly pivot, it's below its first quarterly target, and now it's approaching its monthly downside. So if we get another one or a couple of down days, you can even expect to see 92, 94, 96 areas. Just don't buy just because it reached the price. Wait for breakout back above. But for now, where I would want to buy some is closer to 92, and I believe Raphael remembers this level because we executed some trades months ago based on that level. And why this level is also important is because this thick line is actually our annual pivot. So on my data feed it's 93,400, but with crypto, as I mentioned, you need to use data from wherever you trade. So yeah, but I would really want to see Bitcoin in 2024, 23. Sorry, oh, Freudian slip, 24, 23. No, 94, 93 area to be able to buy. Of course, 24, 23 would be nice, but hey, one level at a time. So yeah, this is where I will be trying to open some position, but definitely based on the picture that I see now, I see no urge and no intention to be clicking just because of round number like 100,000. I know that some people say, oh, 100,000. No, 100,000 is nothing. It's not a level, it's not an interesting price. But mid 90s, it would be quite nice to see. Yeah, so overall, be cautious. There is no reason to chase stocks, especially watch Max 7 stocks and the overall correlations, because this correction in tech can be just another great dip, but that dip can be way, way lower. So be careful about that. But other than that, overall scenario is still the same. 66.58 is the most important for me. I'm bullish on gold, I'm bullish bonds actually, and the correlations quite support that, especially during this correction. Monitor dollar correlations because at least for now it's not the dollar trade anymore. It's more of a bond trade. Yeah, and that's it from me. Hope it was useful.
Yeah, it's interesting we disagree on bonds, so we will see in 2 weeks.
Yes, exactly.
Okay, so yeah, Raghav sent a message, but I mean, you pretty much addressed everything. I guess your view on silver is the same as for gold, right?
Yes, I can touch quickly on silver. Silver is I will share back my screen. Silver overall view is the same, but volatility and how far it's from its previous levels is quite different. So for now, we have a pivot at 47.72. And I talked on a trading plan video about the Hunt Brothers high, and I said that hey, if we reach that Hunt Brothers high above 50, it will go to 53 very quickly because there are a lot of long-term important stops. It happened exactly as expected, but now we have this correction which actually can be compared to gold on a magnitude, but of course that's what silver does. So it stopped, ticked the target, but 47.72 for now is my line in the sand when it comes to silver. Now we are trying to, we settled above and where we closed, yeah, and we closed also above, but settlement price is the most important price, so we settled above that. So for silver, I would really watch 50.36 if you are long, and I would reduce my position slightly. But yes, situation is even stronger with silver above new highs. I expect it to go to 56 and then to $60. But of course, for that to happen, we need to make new highs first. But now we have levels at 50.36 is marked just because it is a Hunt Brothers high, and it will remain the most important price even after this bull market for decades, just because of why it is significant and what happened in February 1980. But yeah, above that we will go to 52 handle, and then I am eyeing 56 or 60. So my view overall is the same, just magnitude of the moves. So definitely I would use smaller sizes for silver, but the view is exactly the same. 47.72 is the level that I would watch. Yeah.
Got it. Yeah, I think we're good. Quite short today. So
Yeah, straight to the point. I hope it was useful. I'm really curious what Ted has to say from macro perspective.
I
But
gold as well. This I can confirm.
oh yeah, so hopefully you'll join us next time. So I hope it was useful. Finally, we have really important moves and manage your risk. Don't buy the dip just because it's dipping and follow the levels. And thanks, Raphael. Thanks everyone for joining, and see you in 2 weeks.
Thank you, bye. See you soon.